In this video, guys, we're going to look at tiny price action clues that a pullback is actually a reversal. Stay tuned for this one. Hey traders, a warm welcome to you. So this one is for day traders, very specific for day traders. Now, okay, maybe there's a little bit of a crossover for swing traders, so don't tune out if you're a swing trader, because you will take something from this, but it's from a day trading perspective. So this is a really good kind of question we get quite a lot, and it's something that I've thought about, done a lot of studying myself. So basing this from experience and from kind of trying to research this kind of thing myself to improve my own ability to spot this. And what are we looking for here? So the scenario is this, right? You have, let's draw it over here so we can use this for some other stuff in a minute. So you've got a scenario where the market's pushing up, it's pulling back, and the age-old question of, should I buy this because it's a pullback and it's going to rip to the upside, or do I want to take it and I just want to just leave it because it's actually going to reverse and go to the downside? Is it going to do A or is it going to do B? I want to have as much data as possible to signify that it's going to do A so I can buy it, or maybe you want to go short. The idea is you want as many clues as possible to give you an idea of what's going to happen, because obviously if we have an idea of what's going to happen, we can position for it. The caveat to this is, hey, if this works every time, then, you know, it would just be making 100% on our trades all the time. So as always, guys, with these things, there's just little clues that we can add to our edge. You know, this is the whole point. We add a little bit more, a little bit more, a little bit more, and hopefully we build a strategy that has profitable expectancy, positive expectancy that is profitable, and we can continue to use for a long time to come and adapt and adjust it. Right, so let's get down to the meat of the content. So we have a scenario now. Let's use the same thing. We push up and up and up and up, and this thing's starting to pull back. Okay, what are we looking for during this pullback? And what clues in the price action may well determine whether this thing's just a pullback and it's going to rip to highs, or it's a reversal? Well, the first major one, which is obvious, is going to be the distance of the pullback. Okay, and the angle of the pullback. If you consider that versus a shallow pullback, you know, a shallow pullback, even if it's taking a longer time, is far better from a bullish perspective than a real sharp pullback. And just think about supply demand. You know, supply demand's gone in one direction, massive demand, and then we kind of the balance has done this. So it's very slightly gone into supply, and it's just slightly narrowing down. So that's a clue that potentially it's going to just a pull back and rip off the upside, as opposed to going supply demand bang the other way and just going vertically down. Now, that's not to say you might not get that kind of peters out, and that's a clue as well. If you get a sharp pullback down that shallows out, then you might say, okay, well, actually, it was just buyers backing off. It's a bit of a knee jerk, but there's some support starting to come into it, starting to just push up and buy that area again, versus you can imagine if you were going shallow and then accelerated. You know, that's a no-no. If you see that kind of thing on a pullback, stay out of it, because it's actually people are seeing, they're getting more aggressive. You can see the difference on that. It's a kind of reverse pattern, but you can see the difference. So if you see a shallowing of the pullback angle, then that's a little bit more bullish and a bit more of a sign that potentially this thing's just a pullback and it's going to push back to highs. Okay, let's look at another scenario. The other scenario is looking at the length of the candles to the downside compared to the green ones. Now, this is a little bit like angle, but bear with me on this. If you have these candles that are pushing, hopefully you can still see it on the screen, but I'm describing it for you, so it should be good. Big red candles, little green candles, that maybe there's a few of them, so this angle's not quite, so you're not quite getting it from this, but you're getting maybe little tiny green candles, and then you're getting big flurries of red. That is a warning sign. Okay, even though that still may appear reasonably shallow, the fact that it's doing a big step across, even though if you kind of had a moving average on it, it would look quite shallow, you've got to be very careful of that, because that is indicating that there isn't much defense from the buyers. Why is that? Because if someone is coming in and is able to drive it down several times, listen, one candle, that's no big deal. 2 or 3 or 4 on an intraday basis, you know, 3-minute chart, 5-minute chart, whatever, that's a bit of a warning sign that this could kind of then turn into a reversal. Why is that? Let's think of it in terms of actually what's going on in the auction process and actually what's going on in the order book. So a seller's coming in, and to move that big candle, they're going to either put a market order in, or there's going to be a lot of sellers who are stepping down, 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 right? That's how the price moves. If there were genuine buyers who thought this was good value, there would be, regardless of the volume hitting those bids, there would be people defending that. I say defending it, they're not necessarily defending it as such. They would be wanting to accumulate stock or futures contracts at that level. And so they would be in with perhaps iceberg orders or big size. So regardless of what pressure they had there, and even if they lifted, another person will be in at another level. So you wouldn't get that cascade kind of multiple ticks lower. It would be stalled by the thickness of the buyers coming in, whether that's resting in the order book or whether that's them seeing prices going lower and then coming in and bidding it up. So that's something you've got to watch out for. You don't want to see those big step downs and pause big step downs. So that indicates potentially buyers are out of it, sellers are starting to come in, and yes, it might shift, of course. This is what the caveat at the beginning of the video is. It might shift back the other way, but at that moment in time, there are not that many buyers about, and there are sellers who really haven't done much to move it down dramatically. And all that could take is for other people to consider selling, and all of a sudden you've got that V-shaped reversal that you didn't want if you were looking for the pullback. So those are the two things. The final thing, guys, is to look for tails basically on your candle. So if you do get that scenario, if you get multiple tails, okay, multiple's better. One tail's fine, but if you get multiple, even better, because that's signifying the opposite of those big solid reds. It means you've got a big solid red, but that's not being accepted in the short term as a new price level. So to get a solid red, say on a 3 minute, have to spend 3 minutes and then close at the lows. If you have a tail forming, then basically it means that even though they've shuttered it down, they've taken out a lot of bids. I should do my hands like this, shouldn't I? I should shuttered it down, they've taken a load of bids. Immediately it's scooped back up again. So immediately buyers have perceived that as value on a very short term and pushed it back up. And if you're getting that continually, it means that buyers are continuing to see it as value. So you may well see that and go, well, actually now I can probably have a nibble on the long side and use a stop under there. If buyers are perceiving it as value and it's being defended on the short term at that level, why don't I have a go up there and use that and leverage out on a stop? Would I want to go in the full boat and put all my chips in on that? I know I wouldn't, but that would give you a kind of clue that potentially it's pulling back. So those three things for you guys. One is this the angle and how steep the pullback is, and whether it shallows off or whether it picks up speed to the downside. The other is the kind of depth of the size of the solid reds. If you get lots of those and little greens, that might be an indication that you're reversing. And the final one is the tails. If you're getting sort of intra-candle change in sentiment, what I call it, so push down, push back up, and it seems like there's some defense there. Yes, granted, yet the buyers aren't stepping in enough to push it up, but that's good, because that's what you're assuming is going to happen. That's what you're hoping is going to happen, as hope doesn't play a role in trading, but you get the point. That's the idea of the trade. The idea of the trade is, well, I've seen buyers stepping up here, perceiving that's value. I'm going to make the assumption that if sellers start losing interest there and those buyers still have more to do, they're going to start to step up, and that's going to make some money for me from the long side. All right, guys, that is tiny price action clues that a pullback is actually a reversal or it's a pullback. Take care, keep your risk managed. If you like this kind of stuff, a thumbs up is much appreciated. And as always, I do appreciate your subscription. Thanks for your support. Take care. Bye-bye.